Hi, welcome to the Market Alert for Thursday, 28th of July 2022. So the Fed hikes 75 basis points during yesterday's FOMC. It remains highly attentive, apparently, to inflation, but cautious economy is softening. It certainly is. New home sales yesterday were down minus 8%, which was massive. Stocks, bonds and gold and crypto soar as Fed confirms bad news is great news again. Yep. And stocks rally as Powell tilts dovish, which is interesting because that's what sent the market up. Well, apparently that's what sent the market up yesterday, that this is 75 basis points is going to be the last one. They're going to be smaller increments, which is, who can see that when you've got inflation running around 10% and they're only up to, 2.5 now? It's just nonsense, isn't it? But it just goes to show that they're struggling to move prices higher, as it says here, or in this one. No, that bit there where it's inflation because cautious economy is softening, which of course it is. Economic news for today. Let's just have a quick look. Advanced GDP for the US this afternoon is 0.4, up from minus 1.6 is the forecast. We'll wait and see. That's 130, so that's going to be another interesting one. If it comes out higher than 0.4, it came out at 1%, for example, that means that the policy isn't working because the economy is growing. There's an expansion of the GDP. But again, we'll see when we get to that point. Gold-silver ratio, well, absolutely tanking because silver's been allowed to move higher for the last 24 hours. Major move, not seen this for a very long time, and you can see the impact. Gold barely moving, but silver playing catch-up here, which we can see there with the gold-silver ratio dropping from 94 to 90 there. Okay, let's have a look at the market's reaction to Powell's rate rise of 75 basis points yesterday evening. You can see in the daily chart of the Dow, the market trading straight through the 62% retracement that we had marked up yesterday, and in between there and the 78% retracement at the moment. Market's done well. It's put on quite a few points, hasn't it, since it bottomed out around here over the last few weeks up to yesterday's high. You can see that we're up at 2,211 points there for the Dow, so it's due for some sort of bit of a pullback there and correction for sure. So I'd be inclined to, especially after the announcement yesterday, it's going to take a moment before he actually becomes fully dovish, maybe tilting that way, but there is still that pressure. Also, one news headline that I missed out, which is really interesting, because when this happened the first time, when Putin turned off the gas and deprived Germany of it, the markets, particularly the DAX, move lower, but it hasn't responded to it this time. So there's a lot of more negative stuff out there that hasn't been taken into account yet. And the 30-minute chart, well, the market was sideways in a range of 100 points, 150 points, and then we have liftoff Houston. This is just absolutely massive. It's 534 points to be precise, but the market overnight is sideways, and it needs to hold above the DP. If it closes below the DP, then we will see prices retrace. But this is a massive move to capitalise upon, given that there is no major news today apart from the GDP number at 130. So watch these on the downside just in case we get that straight reversal, which we've seen many times before. In the German DAX, the market sideways to higher, still coming off this demand absorption yesterday of sell orders coming into the market, still looking fairly bullish. These are the upside targets. You've got the 50 EMA tying in there with the between the 62 and 78% retracement. 30-minute chart for the DAX. Again, you'll see the market moving up 150 points. Let me just get this right. 150 points. Overnight, the market gapped down to the DP, where we saw a bit of demand coming into the market and then bringing it back. And at the moment, it's attempting to move and head towards yesterday's high, the evening high, where the market went to 13,257. So that 50 level is important, as is the high. Go back to the daily. Let's just have a quick look, see where that takes us. So it's just through there. The next upside target, there would be a 50% in here. So let me just draw that one in, because that will give you a good indication of right, well, actually it's 236. So if we go back to the 30-minute chart, that will take you in between the where we're currently trading. It's only going to be 14 points higher, isn't it? That's not 14, 24 points higher. So yeah, the key here is watching the BRN here and yesterday's high, and then in the daily, let's say we'll go towards that 62, which is just above there by 36 points, which will be 13,286. In the 5-minute chart, well, the market didn't do a lot. It was very choppy in a sideways move. It did eventually break out at 1 p.m. and then we had the news, durable goods, and then that sent the market down. We then came back off this at 2:30, and then the market was traded to the downside, and then there's your overnight or early evening Fed response there in more detail. And yesterday, or for this week, we're currently 366 1.2 and 60-40 winners and 2.15 profit factor so far. Unfortunately, I didn't get the opportunity to trade last night, which is rather disappointing, because there was some good moves there, but it is what it is. And in the S&P, this also moving higher, stuck at 62% retracement in the daily chart. 30-minute chart, again you'll see the launch pad there, market coming off Tuesday's high, and then again capitalizing on this as it broke through the 200 MA and the previous day's high. Overnight still sideways, and no doubt they're going to try and move this back up to the high. The same for all markets first, and then see what happens after that. I mean, what have they got to continue to move the markets to these levels? In the FTSE 100, we've got some absorption volume at the 200 MA there, and also 7361. Market's just trading above this at the moment, so could move higher there. Let's just draw in some fibs on this one from here down to here. We're at 62% retracement as well, so we need to take this out in order to continue to move to the upside. 30-minute chart, nice and steady yesterday. We had a bit of a pullback by about 25 points before then moving up on the overnight as well. Nice and steady moves in the FTSE. Nothing to get too exercised about there compared to the Dow. In the currencies, the yen up strongly yesterday, but reversed overnight already. As we'll see, this is the market's reaction to the rate rise up late in the evening. But overnight, the yen has been sold off and is currently sitting at yesterday's low. It's oversold and looking to try and find its way back to the DP level there. The pound also benefited yesterday because, oddly enough, the dollar moved lower, and I'll explain why when we get to it. 78% retracement here for the British pound is where we're at the moment, ties in with the 50 EMA. We could expect this to go a bit higher yet, because we've also got Bailey talking about increasing rates in the UK as well. But this is the pound's reaction to the rate increase, which is over 130-40 points off the DP, and then it's traded sideways, but it's holding at the close at the moment. And finally, in the metals, well, look at silver. Never seen this for a while, where it's been allowed to move higher and then also capitalize on this overnight. I'm actually quite disappointed, because I was hoping that we would continue down to around the 16 or the 14 level. I suppose we could do yet. But because Powell is now, as it says in that headline, tilting towards being more dovish, i.e. not raising rates and actually start thinking about cutting them, The talk was originally that they wouldn't be able to do this until January, but of course we've got the midterm elections in November. We could have all sorts of black swan events and catastrophes in between now and then as well, which will give him the reason to do it. So, what he's done is follow through what he said to retain any sort of credibility or the remaining vestige of credibility the Fed has by actually increasing with these large increments. But, once it has a major impact, then he can retract and say, well, I did what I said I was going to do, and therefore saving his credibility or giving the perception of retaining his credibility. So silver down at the usual 1 p.m. fix, which is normal, but this is abnormal. I'm not used to this. We'll see what happens today. We're through yesterday's high, but let's see if they actually hammer this back, which wouldn't surprise me one bit. Gold reaction also to the upside, but nothing like we saw with silver. But then I've said before, that gold-silver ratio, when it starts to fall, is because silver is really accelerating against the price of gold. And one of the reasons that I like it, because you make a lot of money very quickly when it goes in the direction you want it to. 30-minute gold, you can see they're also moving to the upside on the news, and the dollar down, not a great deal, but enough to move the metals to the upside. The only reason the dollar was down with the rate increase is because, again, Powell hinted during his press conference after that, we might have to start easing back a bit now because I'm concerned about the economy. And then finally, crude oil 107 is giving this market a bit of resistance at the moment, but we're still moving to the upside, so expect higher fuel prices at the pumps. And more inflation, and in theory, more rate increases, but looks like the central bankers are now starting to panic a bit in case they overdo it. Okay, that's it for this one. If there is anything to report during the day, I'll let you know, but otherwise keep an eye on that GDP figure at 1:30, and we've got CPI flash on Friday tomorrow. Okay, that's it. As ever, thanks for watching. See you in the next